Hello, everybody, and welcome to a special holiday week episode of Money and Change. My name is Ira Robinson. As always, we have Stu Shear here. Hello, Stu.
How you doing?
Doing well today. It's a birthday today for my wife, so happy birthday to my wife,
tell
dear.
her happy birthday for me.
Will do.
All right. Well, hey, tomorrow's going to be July 4th, but it seems like in this town, everybody's celebrating a day or two early.
It's very loud.
Loud isn't the word. Yeah, I saw better fireworks last night than what the city ever performs. It's amazing how many local people set off fireworks and you see them go all over the town. So it's kind of interesting, and you don't go to sleep until about 1 a.m.
Yeah,
And you can never find a cop when you need one because they're all out watching fireworks. Well,
exactly.
anyhow, that's the way it is. Hey, at least that's the way it is in Wrinkle City. And by the way, we have a new Wrinkle City out for July. So you want to go to moneyandchange.weebly.com and go to the humor section. You'll find the new Wrinkle City Gazette there. Well, anyhow, first of all, I have to give a shout out to Shana Knack, Knack, at the University of Findlay. I was invited up for a very nice tour of the complete campus facilities, and we had a good time. And we talked about when I went to school there and some of the things that happened. And I had a very good time, and I let her boss know that in an email to her. Hats off to the guys at University of Findlay. It's a very good school, relatively, I won't say inexpensive, but it's not as much as a lot of schools are, and you get a very excellent education there. Well, before we start, we always do a disclaimer, and the information contained in this presented material is from the posting of news agencies on the internet and are not necessarily the views or opinions of the owners of this program. We are not responsible for and expressly disclaim all liability for damages of any kind arising out of use, reference to, or reliance on any information contained in this broadcast. The information provided is not offered as financial advice, financial planning, or for investment purposes, so you want to use this information at your own risk. Now, from the currency chart at xe.com on good old July 3rd, at 4 o'clock, the euro stayed the same at $1.11. The Great British Pound, it dropped 4 cents since we had the Brexit vote. It was at $1.36. It's now $1.32. Some people are saying it's going to go lower. Well, we'll just have to wait and see. The Australian dollar is still at 74 cents to the dollar. The Canadian dollar is at 77 cents, so it gained a penny. The Swiss franc is still at $1.02. The Japanese yen is still 9/10 of a cent. Now, the big thing to look at here is the Chinese yuan. About 3 weeks ago, it was at 15.2 cents to the dollar, and then it dropped down to 15.1 cents for the next 2 weeks, and now it's at 15 cents even. So the Chinese are devaluing their Chinese yuan renminbi. The Kuwaiti dinar is at 331, and if you have dong, well, the barrel got just a little heavier with Vietnamese dong. Last week it was 22,177.86 dong to the dollar, and now it's 22,266.75 dong to the dollar, so the wheelbarrow got just a little bit heavier. Well, Bitcoin got a little bit heavier too. 3 weeks ago, it was 765.70 Bitcoin to the dollar. And then it went last week to 655.01 to the dollar. Well, now it's back up to 664.55 cents to the dollar. Gold, wow, what a story on gold with the Brexit. 3 weeks ago, gold was at $1,280.69 an ounce. Well, it went to $1,315.50 last week, and now it's $1,341.72 an ounce.
Jeez.
Now, I just looked at APMEX, American Precious Metal Exchange, and I was looking at their current. They're asking, in other words, what they want to sell their gold at, $1,344.70. It went up over $24.30 from yesterday. Now, when you take a look at silver, last week it was $17.76. Now it's $19.78. And
Wow,
going to,
that is definitely taking a jump.
oh, it's taken a jump. And at APMEX right now, it went up another $1.24. It's now at $19.85 according to what they had yesterday. So your precious metals are going to continue to go up. For example, platinum was $985.37 last week an ounce, and now it's up to $1,060.27 an ounce. Palladium even went up. It's up to $605.72 an ounce. And when you take a look at what goes on in the markets, man, before Brexit, yeah, the things were moving up just a little bit. But then after the British said, nah, we're going to vote out and get out of the European Union. And that was a surprise vote because the European Union thought, nah, they're going to stay in. But when the British said, hey, we're out of it, even though it's going to take them 2 years to get out of it, there may be some other changes along the way. Well, the markets reacted, and they reacted in some cases violently. And, stocks in the U.S. dropped down. The value of the Great British Pound dropped down. Some other currencies took a little bit of a tumble, and then they started to go back up. We're not sure where the Great British Pound is going to be. It could go from $1.32. It could go to parity with the U.S. dollar eventually. Who knows? It's just that you have to keep your eyes open. But when we have types of stress and problems in the market, then we have people saying, I'm going to take my dollars and put them into precious metals like gold and silver, primarily gold. And you hear a lot of people advertising for this on the radio and TV stations, buy gold, buy gold. Well, if you got the money to buy gold and you can safely do it, well, then it's up to you to make your own decision. Gold is going to go up in price. They said, once it gets above $1,300 an ounce, it could go as high as $5,000 an ounce or even higher, depending on what happens in the world. So, you have to keep abreast of what's going on. And I go through a lot of different sources. I'll take a look at the Drudge Report and all the different sources in the Drudge Report. I'll take a look at Breitbart. I'll take a look at Bloomberg. I'll go to the UK Times. I'll go to like the Guardian, and the Guardian has the U.S. section. So I'll go to Superstation 95. I mean, I've been really delving into a lot of this stuff to find out what's going on. And there's a lot of calamity out there because a lot of people don't know what's going on. And some of the banks are starting to get caught. So if you go to moneyandchange.com or moneyandchange.weebly.com and you take a look at bank rate, which is in one of the sections there, you can check out and see how your bank is rated, and you can compare it to other banks. You need to start doing that now. And speaking of banks, Zero Hedge, there was an article that came out about Italy granted extraordinary 150 billion euro bank bailout program to prevent panic run on deposits. Panic runs. It started in Italy, okay? I believe that was posted at the blog at moneyandchange.com. And then you have another article that came out, Brexit adds headwinds to U.S. companies slowing spending. Well, when you don't know how the markets are going to be, then, where are you going to spend your money? Are you going to put it in capital investment? Or are you going to bank it? Just what do you want to do? Especially when some of your business construction or your business operations might be in a foreign country. So according to Lucia Mutikani, Mutikani, and Malathi Nayak. Boy, I'm getting really good at these names, I guess. From Reuters, it said U.S. business investment already heading for its worst slowdown since the global financial crisis could decline further as Britain's vote to leave the European Union creates more risks for companies. With growing tepid at home, North American companies as diverse as plane maker Boeing or Ford Motor Company or heavy equipment manufacturer Caterpillar and oil producer Exxon Corporation or ExxonMobil now will find themselves trying to plan overseas spending without knowing whether Britain's departure from the EU will upend tariff rules. That starts things moving in the market. Well, Britain did bail out. But what people are saying, oh, it's going to be the end of the world and yada, yada, yada. No, it isn't. Britain still has to trade with the European countries, and the European countries still have to trade with Britain. And the problem that you run into is that it takes 2 years to pull out. So we're still in an experimental phase to see what's going to happen and what adjustments have to be made. And one thing that I read on the web was that after the British pulled out, there was something there that said the European Union was going to form their own army made up of all the member states. And I think maybe that was one of the reasons that Britain said, okay, we don't have any sovereignty anymore in the European Union, so we're pulling out. But you have other reports where people in the cities voted to stay in and the people in the countryside voted to go out. So, we'll just have to wait and see what happens there. And, you talk about different banks having problems. Well, there was a report by David Henry on the businessinsider.com. Said Santander and Deutsche Bank, well, the U.S. stress tests show that they're repeat offenders. And it said U.S. units of Deutsche Bank and Santander suffered the ignominy of failing U.S. stress tests yet another this year. Less than a week after Britain's shocking vote to leave the European Union sent their investors running for cover. Santander's U.S. bank is the first to fail in the test 3 years in a row. Both banks failed because of poor risk management and financial planning, not for the lack of capital, the Fed said, that meaning the Federal Reserve. Santander's chairman, Anna Botin, B-O-T-I-N, vowed in January to fix it within 2 years, after which she would consider selling it. Yet any disposal will be tough while the Fed standards are unmet, meaning Santander cannot access the capital to invest in its bigger businesses in Spain, Brazil, and Britain. And it cannot even draw a dividend from the unit in the meantime because of Fed stipulations. Santander's U.S. unit operates a retail and commercial bank with 670 branches and 9,800 employees in the northeast part of the country. It also owns nearly 60% of publicly traded lender Santander Consumer USA Holdings. And, Santander says, well, we're fixing the problems and we'll be ready for next year's stress test. Well, what happens if the stuff hits the fan this year? They're not going to be ready. Well, Santander hired Powell, who was a former JP Morgan banker last year, and is investing about $170 million a year to reorganize the complex structure, partly a hangover from the acquisition of Sovereign Bank in 2009. And Powell is more than a half dozen executives hired in the past 18 months to fix the bank. So they realized that they had some problems, and so they had a guy by the name of Powell to come in and try to fix it. Well, then you get to Deutsche Bank. We talked about them last week, and I think the week before. Well, they had their stress test, and they failed. And so the Deutsche Bank unit that failed, Deutsche Bank Trust Corporation, is one of a handful of entities the company has in the U.S. and holds transaction banking and wealth management businesses. So here they have problems. And just an aside from that, I was talking to a banker friend of mine on Friday, and we were kind of joking around. I said, if Deutsche Bank folds, goes under, goes kaput, if there are any U.S. banks tied into them, we're in for a world of hurt.
That
And
absolutely would be, yeah.
she looked at me and her eyes got this cold stare, as if And she said,
Oh no, we have someone who's awake here.
uh-huh. And it's like, it's scary. And she told me, she said, it's real scary out there. I said, well, between you and me, the fence post, yeah, it is. And if Deutsche Bank goes under, there are going to be others that are going to tumble too. Chances are it's going to be Deutsche Bank, Santander. And I don't know about JP Morgan, Citibank, or Wells Fargo. It depends on how they're all interconnected.
I would say most likely, given my own investigations into how the banks are interconnected together, I think a lot of them would fail this type of stress test if they were really honestly put under it.
Well, they might. And we'll get into some of the ones that passed. But, George Soros, our good buddy, well, he bets 100 million euros against the Deutsche Bank. And people are grabbing their money and running. So what does that tell you? Did George know something that nobody else knows?
Wouldn't be shocking.
Or did he have something that he controls that can cause that problem?
That wouldn't be shocking either.
No. I mean, you bet 50 cents that they win and 50 cents that they lose, and you break even. He lost on the Brexit, so now he's betting against Deutsche Bank. Yep. He'll make his money up one way or another. But there was an article in superstation95.com, and this is out of Australia. And they said that Soros bet 100 million euros against the Deutsche Bank, which is about 111 million US. So I'm based on the current conversion. But it said billionaire investor George Soros took out a staggering $100 million bet, 100 million euro bet that a major German bank would collapse after Britain's decision to cut ties with the crumbling EU, European Union. The man who broke the Bank of England took a short position of 0.51% in Deutsche Bank shares on Friday, the day after the people of Britain backed Brexit. In growing signs that desperate Angela Merkel's economy is struggling in the wake of the nation's decision to leave the EU, Soros Fund Management said its short position was now at 0.46%, suggesting it had begun to take profits from the trade. Well, since the momentous decision, shares at Deutsche have dramatically slumped, and at one point, shares were down by more than 13% compared with Friday's high point. And by early Tuesday afternoon this week, they were down by 7.9% from that level. Now, Marshall Wace, that's WACE, a British hedge fund, took a big bet against Deutsche Bank. And banks across Europe have been battered by Britain's decision to turn back on Brussels in a historic referendum on June 23rd. But Deutsche Bank is especially troubled. The bank, which is undergoing a deep restructuring, has been hamstrung by the fallout from the financial crisis, posting a record loss of 6.8 billion euros in 2015. Around a year ago, John Cryan, that's Cryan, took over as the bank's new CEO with a clear mandate to slash jobs and costs. Since then, the bank's share price has dropped by nearly 60%, making it one of the lowest valued international banks. And it comes after Soros, who banked profits of $1 billion, that's with a B, dollars, by famously positioning himself against the sterling 22 years ago, said in a British exodus from the bloc would make the eventual dissolution of the EU practically irreversible. The veteran advisor, who's 85, said that Brexit was the final nail in the coffin for the EU. Now, they had a little commentary there that said under the new European law, depositors with money in Deutsche Bank will be exposed to a bail-in if the bank fails. And that means their deposits will be used to pay the bank's debts. Didn't we talk about bail-ins before?
Oh, yeah, quite a bit.
Oh, yeah. Well, anyone with money in Deutsche Bank would do well to consider that and decide if keeping their money there was a smart move. And that's on their commentary. It says, of course, we are not licensed financial experts and cannot give financial advice. Before you do anything with your financial situation, you should speak with a licensed financial expert. I bet you that's their disclaimer. But then they said, having said that, this is not rocket science. Billionaires like Soros don't make 100 million bets so they can lose. Soros has a proven track record of knowing when the banks are on the rocks. He proved it literally by breaking the Bank of England. The fact he is now hedging for a failure of the Deutsche Bank likely means that he knows the end is nigh for them. Some people might take that to mean that they're to get their money and run for the hills right now. Well, it comes out the bottom of this commentary. It says Deutsche Bank is sitting on about $75 trillion in derivative contracts. And if Deutsche Bank goes down, the entire global financial system will go with it. Nothing would be able to stop it. And that was their commentary, but they're not financial experts. I'm not one either. And what information you get from the show, you just take it or leave it. Now, there was another article at Zero Hedge. It said Deutsche Bank poses the greatest risk to the global financial system, so says the IMF, or the International Monetary Fund. And it says, as they explained many years ago, it said the bank with the simple largest derivative exposure is not located in the U.S. at all, but in the heart of Europe. And its name, as some of you might have guessed by now, is Deutsche Bank. The amount in question, 55 billion, 605, no, 55 trillion, 605 billion, 39 million euros, which converted into US dollars at the current euro US dollar exchange rate is about $72.8 trillion, or roughly $2 trillion more than JP Morgan's. So here we are 3 years earlier, when not only did Deutsche Bank just flunk the Fed stress test for the second year in a row, but moments ago, in a far more damning analysis, none other than the IMF disclosed that Deutsche Bank poses the greatest systemic risk to the global financial system. And it says that the German bank appears to be the most important net contributor to systemic risks.
That is just crazy, man.
Well, I know. In the key section of the report, it says domestically, the largest German banks and insurance companies are highly interconnected. The highest degree of interconnectedness can be found between the Alliance, Munich RE, Hanover RE, Deutsche Bank, Commerzbank, Ariel Bank, with Alliance being the largest contributors to systemic risks among the publicly traded German financials. And both Deutsche Bank and Commerzbank are the source of outward spillovers to most other publicly listed banks and insurers. Given the likelihood of distress spillovers between the banks and life insurers, close monitoring and continued systemic risk analysis by authorities is warranted. See how all interconnected they are? It's scary.
See, that's what I was saying, is that I think that they're all very much interconnected together. And if one of these big ones falls, I mean, the dominoes are just going to come tumbling down.
Well, in Europe, and it depends on how the U.S. banks are connected to the European banks and what common derivatives they have. or hedge funds. And remember, we always talked about hedge funds and derivatives are the
Well,
cause of the financial problem.
those derivatives, I mean, that's a huge ball of wax right there, man.
Yeah. I mean, you could imagine a 12-story outhouse and it's all filled with derivatives and they're all coming due and you're down at the bottom as a banker and it's like diarrhea. It all flows downhill and you're down at the bottom of the pit.
Sure
The
are.
sump pump just quit. And you have a shovel. Almost $73 trillion. I mean, that's enough to make you jump off a bridge, or maybe a nail gun in the back of
I
the
was going to
head.
say suicide by nail gun, right?
Oh yeah, yeah. I mean, and then Zero Hedge pointed out a couple of days ago that Puerto Rico defaults on a $2 billion deal in debt payments. They defaulted. Congress didn't do anything to bail them out yet. And it said, as expected, Puerto Rico will default on about $2 billion, that's with a B, dollars in debt payments Friday, which was a couple of days ago, including $780 million in constitutionally backed general obligation bonds. So under these circumstances, these executive orders protect the limited resources, which Alejandro Padilla, who's the governor there, did. But, I mean, they defaulted. There are states here in the U.S. that could default. The Puerto Rico Electric Power Authority, $420 million of principal and interest. General obligations, about $816 million of principal interest for Puerto Rico's operation. Puerto Rico Highways and Transportation Authority, $220 million of principals and interest. And they repay their debt with gas tax, and they defaulted on that. Puerto Rico Public Buildings Authority, $207 million of principals and interest. Aqueduct and Sewer Authority, $135 million of principal and interest. Puerto Rico Infrastructure, $78 million principal and interest, and they defaulted on it. And you take a look at other things that are tied in with that. You have the Puerto Rico Convention Center District, $20.8 million principal and interest. Obligation bonds, $13.9 million in interest. Government Development Bank for Puerto Rico is $9.1 million of interest. And the Puerto Rico Public Finance Company, $4 million of principal. And since August, the agencies failed to pay investors, and that was the first Puerto Rico agency to default after legislature failed to appropriate needed funds, and it has $1.1 billion of debt outstanding. There's some problems out there, people, and sometimes just the general media aren't bringing this out. They're not saying, well, we got a big problem with Puerto Rico. We got a big problem over in Europe. We've got a big problem elsewhere. Not all publications are coming out with that.
Exactly.
And it takes a lot of time and effort to dig this out. And sometimes my face is in the computer between 4 to 6 hours a day looking for all of this information and trying to confirm it. And it's an unpaid job, too. I do it because I want to help people out and let them know what's going on. And between the research and moneyandchange.weebly.com, that takes up a lot of time. But hopefully, if you use the website and you listen to the show, you'll learn something, and hopefully you'll be able to help yourself before problems really take off. Well, I'll tell you what, Marcy Gordon at AP and again with abcnews.go.com, the Fed gives okay to 30 banks to up dividends and buy back shares. And that article came out on the 29th, and it said that the Federal Reserve on Wednesday gave the green light to plans by major banks in the U.S. to raise their dividends and buy back shares, judging their financial foundations sturdy enough to withstand a major economic turndown. And the Fed rejected the plans put forward by the U.S. businesses of 2 European banks. Gee, can we guess? How about Deutsche Bank?
Would Deutsche
What
Bank be
would,
one?
oh, yeah. What would be the other one?
JP Morgan?
No, Santander.
Aha.
Oh, yeah, they got slapped around a little bit. Morgan Stanley's plan only got conditional approval, and it has until the end of the year to revise it. But the Wall Street institution was still allowed to return profits to shareholders, and it quickly announced plans to buy back up about $3.5 billion worth of its stock and boost its dividend 33%. And as a result of its annual stress test, the Fed outright rejected plans by the U.S. division of Santander and Deutsche Bank Trust Corporation, the U.S. transaction bank and wealth management business of Germany's biggest bank. It was the third straight year that the Fed rejected the plan of Santander, which is one of the biggest banks in Europe, and the second straight rejection for Deutsche Bank. Well, the remaining 30 banks were allowed to raise dividends or repurchase shares. They include JP Morgan Chase and Company, Bank of America Corporation, Citigroup Incorporated, Wells Fargo and Company, which are the four biggest U.S. banks by assets. And a number of banks quickly jumped in with announcements of share buyback plans, and that included Bank of America, which is $5 billion with a B, and Citigroup up to $8.6 billion. And the announcement on the second round of stress tests followed last week's initial results. The regulators determined that the 33 big banks hold more capital than at any time since the crisis and are adequately fortified to withstand a severe U.S. and global recession and continue lending. Fed's most extreme hypothetical scenario in this year's test envisions the U.S. economy falling into a deep recession. Gee, haven't we heard that someplace? Causing the stock market to plunge 50%. Unemployment climbs to above 10%, while housing prices drop by 25% and commercial real estate prices tumble 30%. In this scenario, investors would be so panicked that yields on short-term U.S. Treasury securities would go negative, meaning even the safest of assets would still lose money. Gee, if unemployment climbs above 10%, let's see what we've got here. Going to the debt clock. Well, let's see here. The official unemployed is 7,326,718. Oops, 17. Somebody just got a job. And the actual unemployed is 15,231,393 people. Gee whiz. We're not at 10%. What is about 23%?
Right around there is an estimate. Yeah.
Yeah, around 23%. So the Fed's screwed up on that one. Unemployment climbs above 10%. Well, we're already there. The stock market plunged a little bit, but it didn't go down 50%. You know, I don't know about the Fed's hypotheticals. I really don't. I mean, look at the banks that are out there, and if they start tumbling, Deutsche Bank, Santander, then it comes over and we start getting the big four. JP Morgan Chase, Wells Fargo. I mean, this is all hypothetical. And then you get, like Citibank, Bank of America, and the others, and they all go down. Well, then what other banks are tied in with those banks? There's a lot of affiliation there. And it's scary. So if you're not putting back some money, you're not paying down your bills, you're not buying long-term food. Oh, God, have I said this for what, 3.5 years now?
Somewhere around in there.
Yeah. I was just out with friends last night for dinner, and we went out to it's now publicly open country club in a neighboring town, and we were out there, and we thought, well, we'd just see how the food was, which was pretty decent. And we got talking, and later on we went to the Elks Club where we're both members, and we started talking about the finances and everything going on. And I said, look, have you guys started buying up long-term food supplies? No. Um, Gee, how about water? No. Pay down your bills? Oh, yeah, we've got our bills paid down. House is paid for, cars paid for. Okay, do you have any silver? Do you have any gold? Something to think about. Do you have any excess money in the house? Something to think about. I don't care what your situation is there. But all of a sudden, my friend's wife's eyes got real big. And I told her, I said, look, the stuff's going to hit the fan. It's bound to. And I said, that's why I do the radio show. I want to tell people to, hey, watch out for what's going on. You have to. If you're not paying attention and you get blindsided, the riots in Venezuela, you want to talk about people without money, people without food, people without gasoline.
$45 for a dozen eggs, anywhere between $45 and $100 for a dozen eggs.
Yes, but were they quail eggs?
Aha.
I mean, frog eggs? Well, from contented frogs. Um, you know, I, you know, it's bad down there. I mean, people would kill for toilet paper.
Yep.
Can't eat it, but there are other uses for it. You know, it's scary. I mean, we could get like Venezuela. The government went south there and they nationalized a bunch of businesses and they didn't even have enough money to print their own money, let alone, and they used to be a rich oil company or a country, with all the different oil companies down there. And they made some decent bucks. The socialists came in, took it over, and it all went to hell in a handbasket. Almost sounds like the U.S.
And it
All
went
of our
really
jobs
quickly.
are going overseas.
And it went really quickly.
Yeah. Yeah. So, and now they don't have toilet paper. They don't have food. They have riots in the streets. People are getting killed over different things. I mean, it's really the lunatic fringe down there. And it could happen here. If you have a depression and you have food riots and everything else, yeah, it can get quite nasty. So if you're not prepared to take care of what's yours, you have a problem. Now, here's an article that was in a Zero Hedge. It said "Rotten to the Core," and it was submitted by Robert Gore through Straight Line Logic blog. And it said coercion is inseparable from corruption. When a group coerces with impunity, it steals from, lies to, defrauds, and enslaves the subjugated. The dominant group invariably develops a morality comforting ideology of its superiority and the subjugated's inferiority. Such relationships are the essence of corruption. And he said every square inch of the planet is subject to the jurisdiction of one or more coercive regimes with their attendant corruption and fraud. Trillions of dollars, euros, pounds, and yen, and the rest are extracted from the productive and diverted to governments who buy political support. And then trillions more are borrowed. Central banks issue fiat debt units backed by only laws mandating their acceptance and extract funding for governments via the hidden tax of debt depreciation and the hidden theft of debt monetization and interest rate suppression. And regulation allows governments to reward cronies and extort and terrorize the unfavored. Perpetual wars benefit militaries and those who supply the armaments with part of their profits recycled to those championing the war effort. This is pervasive legal corruption. One can only guess at the extent of the sub rosa criminality which may dwarf it. Now, last week's Brexit vote, in particular, finance markets' reaction underscore the corruption and fraud and the inevitability of its failure. Brexit is a victory for Britain's honest producers, those who work in districts far removed from the city, which means London's financial precinct. They will be freed from onerous European Union mismanagement, bureaucracy, regulations and taxes that have contributed to Europe's economic stagnation, dearth of innovation, and persistently high unemployment, especially among its youth. The European Central Bank's debt monetization and negative interest rates, while obscuring the sorry state of the European economy, have only made it sorrier. British voters chose to free themselves from the European Union albatross, although they will still be plagued by numerous homegrown albatrosses. When the high and mighty sing the same tune, Britain needs the EU more than the EU needs the British. The opposite is assuredly true. The British economy has outperformed most of Europe's sluggards. Trying to get a fix on large banks is always a crapshoot. Their financial statements are usually next to useless. But it appears that British banks and their regulators took more steps to address the problems exposed by the last financial crisis in their continental counterparts and may better withstand the coming stresses. And then again, British banks were hit just as hard as continental ones in the 2 days after the vote. The report says never underestimate the petulance of humiliated Eurocrats or other poobahs for that matter. And what terrifies the Eurocrats is the virtual certainty that the British economy will outperform Europe's after the Brexit. They may cut off their constituents' noses to spite their own faces, erecting trade barriers against British goods and services for which the Europe's customers will pay the price. However, trade barriers are a two-way street. Britain is an important export market, especially for the de facto leader of the EU, which is Germany. So cooler heads may prevail, and a hope expressed by Nigel Farage, and I really like that guy, in a remarkable speech to the European Parliament. And can anything be more corrupt than the desire to gratuitously harm another to preserve one's power? Such corruption is the rotten core of the global economic and financial system. Its pilots are determined to fly it in a mountain, but will fight to the death any attempt to wrest away the controls. Global finance and global statism are Siamese twins joined at the brain, a fact made abundantly clear during the last financial crisis, according to this report. And it said central banks provide emergency fiat liquidity on preferential terms. In other words, my financial market puts, P-U-T-S. Promote cartelization, in other words, promoting cartels, and serve the constituent banks they were meant to regulate, acting as the bank's agents within governments. Well, Brexit is a shot across the bow, but it's only a shot across the bow. There's not one price in the entire firmament of markets and finance that is not pegged to continuing regimes of corruption and fraud. And it goes on to say the belief that it will be understandable, but a house of cards must fall. Political winds, Brexit, and what's sure to follow may blow this one over. It may collapse due to its structural deficiencies, or most likely some combinations of the two will render it rubble. The important point is that rotten to the core economies and finances resting on foundations of coercion, corruption, and fraud have to be rendered rubble before freer, more honest, and more durable structures can be erected. And that's true. You have to get rid of the corruption before things get better. Well, Zero Hedge came up with another one, and it was on, there is now a staggering $11.7 trillion in negative yielding debt. And I do believe that's posted on moneyandchange.weebly.com.
How much was it?
Read that report.
How much was it?
11.7 trillion in negative yielding debt.
Oh, good God.
Oh, yeah. Remember, you're down at the bottom of that 12-story outhouse.
Oh, yeah.
Mm-hmm. It's going to happen.
It's a little smelly down here.
What?
It's a little smelly down here.
And it's dark, too. Yeah. And it's going to get darker. So if you're not prepared, you have a problem. There was another thing in Zero Hedge about survey responses. And I'll just go through a few of them. It says response number one, the Fed credit conditions and unemployment. Fed policy is has us locked into a lethargic and tenuous position. It appears the Fed doesn't know how to get off the horse it created. Duh. How about government regulation? We're experiencing a major demand and instability in the U.S., and continued management focuses on upcoming regulatory changes and is keeping us from pursuing new markets. Gee, response number 3 to the survey, Obamacare productivity and deflation. Gee, do you know what the ACA is? It should be the UACA, the Unaffordable Care Act.
To
But the
say the
Affordable
least.
Care, yeah, the Affordable Care Act continues a downward push on productivity.
Gotta love Mr. Obama, the first president to ever demand and successfully make it so that Americans have to buy a third party product.
Mm. Oh, yeah. I go to get my medications. And, being retired, I'm on Medicare. And then all of a sudden they said, oh, well, it'll be $300. What? Yeah, $300. Why? Well, your medications well, you're in the donut hole. Donut hole? Hell, I'm in the bottom of the 12-story outhouse.
There's a big hole there that's not the donut, though.
No, no. So I had to whip out the credit card to go ahead and pay for it. And then when I got home, I got the bill and I wrote the check for it to pay it all off. My God. It was bad enough having to pay out $1,000 for glasses and then $300 for medication. I mean, I don't know. It's getting frustrating. Well, now I'll tell you what. Now here's a wild one that came out of Superstation 95 this week. Said EPA raises safe radiation limit for drinking water by 3,000%.
Isn't that wonderful?
Oh, it's great. Says in this public EPA announcement or document, it says the agency said it was ordered by President Obama's Executive Order 12656, Section 1601, subsection 2, to develop for national security emergencies guidance on acceptable emergency levels of nuclear radiation. And in this report, the EPA warns the nuclear incident may strike the United States, and if people are going to drink the radioactive water, somebody needs to decide how much radioactivity Americans will be allowed to consume. You know you're in trouble when you go to the bathroom at night and you don't need to turn on the lights to take a leak.
You got it.
I mean, you don't have to worry when you're driving down the road. You don't need to turn your headlights on because your eyeballs are already putting beams down the road.
This would go right into the Pentagon's plans for a zombie apocalypse, wouldn't it? I mean, they literally have plans in place for a zombie apocalypse.
Could very well be. Well, here's the deal. Large-scale radiation contamination incident could impact the United States, driving the need for a pre-established drinking water, PAG, whatever that is. EPA is proposing a two-tiered intermediate phase drinking water, PAG, of 100 millirems, projected dose for the first year for infants, children and pregnant and nursing women, and 500 millirems projected in the first year for the general population. Well, that's like about 250 chest x-rays directed at your thyroid. And they go on and they give all this other statistics. And it said under Obama's new rules, the EPA can tell entire cities it's safe to drink deadly radioactive water. And that's almost certain to kill you.
Thanks, EPA.
Is Jim Jones resurrected?
Is this the same kind of safety measures that they came up with in case of a nuclear explosion for kids to duck down underneath their desks and put their hands over their heads?
And kiss your butt goodbye.
I mean, it's the same thoughts, right? It's the same thought process there.
Well, it could very well be. Well, anyhow, that after all this report and so forth, it said it's now so bad even pro-big government environmentalists are freaking out and decrying the EPA's sheer stupidity. Don't use my name in vain, daggone it. EPA is just stupid. They make their own rules and regulations.
They always have. They
That's
always
not,
have, that's for sure.
yeah. Well, anyhow, the solutions that they came up to was a high-end water filter, of course, and as a real scientist running internationally accredited laboratories, cwclabs.com, they've tested the ability of emergency water filters to remove elements with radioactive isotopes like cesium, strontium, and uranium. Well, then there's this little parentheses, and it says Superstation 95 has no business or financial interest in the company named above or in any water filtration systems. But they go on to say, hey, the Berkey water filter works if you get the right filters. Well, if you take a look what's in your water right now, I would be getting a Berkey filter, or you could make one. And if you go to the moneyandchange.weebly.com website on the do-it-yourself or the DIY page, I believe there's something there on how to make a Berkey type filter, water filter, using a couple of buckets, a lid, and the filters from Berkey, and a spigot, and you get the same type of filtration. I did it. It's very easy to do. All you need is a drill, a couple of buckets from Home Depot, a lid. You can even get buckets from a pastry shop that does.
Icings.
Their icing comes
Yeah.
in the five-gallon buckets.
Yeah, anything that's food grade.
Yeah, but it's a drip system, and it might take a couple hours to get 4 gallons of water. But hey, at least it's filtered and it's good. I tested mine out, and I used rainwater and tried the filter, and it does work. So I cleaned everything up and put it back in storage. But
That'll be
I'm
useful
looking
later.
at, huh?
So that'll be useful later, yeah.
Well, and I'm also looking at getting a Berkey filter. There's also an Alexa Pure that's out there. They're about $200. They're not cheap.
Yeah, we've got that.
But how do you like your water?
Really well. It helps a lot. We notice when we go to put the water in, sometimes it's cloudy-ish, and by the time that it comes out, it's nice and clear. We've had some testing done, and yeah, it's pure. Works really well.
Well, I'm probably going to have to do that, and I might get the one with 4 filters instead of 2 because I don't want to have to wait for I don't know how many hours to get 4 gallons of water.
Yeah.
And it takes out fluoride too. And
Yep.
with people that don't understand things, what fluoride can do to your pineal gland, that's probably why we're getting a bunch of idiots in the world because they're drinking fluoridated water. But I won't opine on that. and here's the big one for the week. We thought Iceland was something when they put the bankers in jail. Remember, they put them out on that island. Beautiful view, nothing around, and you can't swim to go anywhere. And it's nice and cold in the winter, so you can stay inside all you want. Trouble of it is, winter probably lasts about 10 months.
Yeah.
And, you can go out and talk to the seals if there are any around, if you can find anything. But that's where they put the bankers. Well, Vietnam has a different way to do it. Globalpost.com said Vietnam is sentencing corrupt bankers to death by firing squad.
Some old West style justice there.
Yeah. It says the authoritarian Southeast Asian state doesn't just send unscrupulous financiers to jail, sometimes it sends them to death row. It says amid sweeping cleanup of its financial sector, Vietnam has sentenced 3 bankers to death in the past 6 months. The duo now on death row embezzled roughly $25 million from the state-owned Vietnam Agribank, and their co-conspirators caught decade-plus prison sentences.
You
These guys don't mess around.
You thought the spanking thing was bad enough in China.
Yeah, where the bankers spank their employees, and the Vietnamese are saying, "Oh no, we're not putting up with that. No more rice for you, buddy."
Oh, wow.
I mean, that's the way it is. Here's one thing, and I'm just checking things out on the Be Prepared section. If you go to Money and Change Weebly.com. I've got stuff on medical supplies, bug out bags, disaster kits, food costing, food storage. I've even got one thing there about water storage, filtration, and purification. They even have a Berkey there, and they also show the buckets. I've got a lot of information on that preparedness page, a lot, including that report that I read about the nuclear water. But there's one called Baby Steps to Make Room for Your Storage Supply. Organize the closet, put it behind the couch. Use a bookshelf or cabinet. Make an end table. Stack up the boxes and put cans in to create a foundation for the end table. Put a wood board over it. Put a tablecloth on it. Hide it under the bed. Store it in the car. Stock up your medicine cabinet.
I've always said if you have room for your knickknacks, you have room for food.
And in the food industry, I always said if you have time to lean, you got time to clean.
Yep, exactly.
And employees used to look at me like, what? Oh, yeah. And I'd say, well, if I work at 100%, you work at 100%. If I play 5%, I'll let you play 5%. But I work at 110%, so get your butts busy.
You got it.
And I set the example. Well, there was also another article in here about 26 Depression-era recipes you can use. And it talks about growing your own food and sharing food and so forth, but it gave bread and breakfast ideas for milk toast, cornbread and milk, hot milk and rice, cornmeal mush with milk, sugar bread, never had that, sugar cookies and coffee, oatmeal pancakes, spice. Go do that. Fresh bread, hardtack, soups and stews, all kinds of good things there. And humor, just remember this, we had disaster at the Happy Buns Clothing Optional Society in Wrinkle City.
Oh, no.
And according to Orville Buns, who's the co-owner of the nudist colony, he said a freak accident happened when several golfers decided to shoot a Roman candle from the practice course at Echo Pond Golf Course. One of the flaming balls ricocheted off a tree and crossed over into the Happy Buns flower gardens and hit Emma Scatterbuck and the Snapdragons, and then bounced over into the wooded area and hit Delbert Gephardt and the Walnuts. Both were shaken but were not hurt. And Orville Buns hopes this is just a random accident and not an omen of things to come. He urges common sense when shooting fireworks at defenseless, unclothed people. And that is our public service announcement for the day.
That works.
All right. And with that, as always, go to moneyandchange.weebly.com and donate. If you have the money to do it, donate to the radio show to pay for the bandwidth and the electricity to keep us going. I don't get paid for anything. I donate my research and everything to the show, and hopefully I'm helping some people out there. So with that, Ira, that's all I've got for this week, and God willing, we'll be on next week.
You bet. Thank you so much, Stu, for all that you do. Everybody else out there, make sure you visit LNMRadioNetwork.com. Don't forget this is going to be on YouTube, youtube.com/C/Open Eyes Network. We'll talk to you again soon.